bit of a cliche, but in the first half, the result was very strongly up. In the second half, it basically flatlined. So if you look at net income, there was no growth in the second half. If you look at two of the big drivers of bank profitability over the last 3 or 4 years have been bad and doubtful debts, which have been declining from their post-crisis peaks, and costs. CBA's cost performance is exceptional. Costs in absolute terms actually fell in the second half, and over the course of the year, the cost-to-income ratio now is at sort of low 40s. It's phenomenal effort. Bad and doubtful debts, however, and as I say, that's been a significant driver of bank profitability, rose slightly in the second half. And I think that's actually made the market slightly nervous, because you can see the end of the cycle of declining bad and doubtful debts. And so while the numbers aren't disturbing or massive in the scheme of things, the fact that that little pickup occurred in the second half basically says that as a source of future profitability, declining bad and doubtful debts is gone.
Now, why are they going up?
Well, partly because they're at exceptionally low levels by historical standards. Banks ought to have a meaningful level of bad and doubtful debts, because that reflects the risk that they take, and they provision against that. And they've been driven down to historically extremely low levels, partly because consumers and businesses aren't borrowing as much and aren't taking the risks that ultimately translate to bad and doubtful debts. So that's part of it. But also, when you get down to the dregs, if you like, in terms of your non-performing loans, it gets harder to recover money from those customers, and so you write off more.
Now, is it because they're driving more and more into that home loan market, trying to pick up market share, they're picking up sort of more questionable customers, or is there something else more fundamental in those debts?
And I think most of this modest increase in bad and doubtfuls comes out of their business customer base, and the environment for business has been quite difficult the last couple of years. It's not improving. It's become quite brittle out there, and so you'd expect to see some instances of bad and doubtful debts out of that sector, and that's what they've seen.
Now, one of the issues for CBA has been their wealth division and concerns over them mis-selling products and financial advice. What's that division done, and is there growth in that division because of some of the changes that we've had to see from regulators? There's
been very strong growth in its profitability. It was up 17% in the year, so it's a very strong profit contributor and produces big numbers. And the advice issue, the scandal, the mis-selling, it may impact results in future, although I think Ian and Rev said when they announced their process of dealing with those issues that the actual dollar numbers won't be material in the context of CBA. It doesn't seem to have affected their ability to do business, which I suppose is the key from the CBA's perspective, or at least so far it hasn't impacted their ability to do business, because, as I say, the result was very strong.
Finally, Steve, the big thing that all investors want to know about CBA is the dividends. Are they on track to keep paying those big dividends? But then again, the question is, does the performance they achieved today reflect the share price that they've enjoyed for all this time?
Oh, they're very, very highly priced. They are priced for absolute perfection, and this result is not absolutely perfect. They've committed to paying out about more than 70% of their profits as dividends, and I think it's about 75% the ratio today, so the dividend's gone up again. The question mark about bank results going forward is, can they find a way to generate the kind of growth that underwrites the share prices that they've enjoyed? And it's going to become more difficult because there's no growth in the external environment. There's a limit to what you can get out of your bad and doubtful debts. There's a limit to how big an impact future cost cutting can go, because they're all very efficient by any standards. And then, of course, you've got the shadow over them of the financial system inquiry and what it might require of them in terms of more capital, paying for government guarantees and the too big to fail status, that kind of stuff. So there are some potential risks to their levels of profitability going forward.
Stephen Bartholomeusz, thanks very much.
Thanks, Jackson.